Every Monday to Friday, this is Peter Lewis's Money Talk.
Money Talk.
Good morning and welcome to the new business week. This is Peter Lewis with Money Talk for Monday the 24th of February. In today's business and finance headlines, a series of economic reports Friday signalled that the US economy was facing growing challenges from elevated borrowing costs and inflation. Donald Trump's tariffs have also begun to dent sentiment among consumers and businesses. Japan's headline inflation rate in January climbed 4% year on year from 3.6% in December, hitting its highest level in 2 years and further strengthening the case for rate hikes by the country's central bank. The Hang Seng Tech Index of the 30 largest technology companies listed in Hong Kong surged 6.5% Friday to a 3-year high. For the week, it gained 6%, stretching the winning run to 6 weeks, the longest streak since January 2023. The Monetary Authority of Singapore announced a package of measures on Friday to help turbocharge the city-state's equity market, which has suffered from more delistings than initial public offerings in recent years. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
I'm joined now by Shanghai-based independent economist Andy Sher. Morning, Andy.
Good morning, Peter.
Now, last Monday, President Xi Jinping attended a meeting with prominent entrepreneurs in a show of support for the private sector. Also, there was Jack Ma, the founder and former CEO of Alibaba, but a lot of other tech entrepreneurs and founders were there as well. First of all, how significant was this meeting, do you think?
Well, I think that it was just a signal to the market that the Chinese government was backing private enterprises and also recognized the contribution of private enterprises in overcoming the U.S. tech sanctions.
And presumably, in order to do that, it needs private enterprises on board, doesn't it? And you know, there has been a feeling in the past among the entrepreneurs that they've been sort of singled out for investigations and fines and so on. So do you think that period is now over?
I think it is kind of over for now. I think that the issue is still, I think the China's market economy is based on government in charge. So any private enterprise that is trying to achieve influence above what they are doing is likely still going to be dealt with. So Chinese system is very different from the Western system that allows rich people to rise to very powerful positions. In China, money cannot become power.
That never used to be the case, though, was it? It's only really since Xi Jinping came into power that there has been this change.
It's Mandarin. China's political system is based on that, basically like forever. So Chinese political economy is really sensitive about the prominent business person that appears to be become very powerful. So historically, it's like that.
So what can China do to try and help these private companies to grow and be able to compete globally? I mean, we have seen a big rally now in their share prices, so presumably they are expecting something in terms of either economic stimulus or measures to support the private sector.
No, I don't think so. I think that the Chinese government, what the Chinese government has been doing is to boost funding, in particular in terms of investment funds for startups and for research, R&D. For automobile companies or for whatever, the government is pouring money into research labs, national labs that is, for example, do research in battery, and also that the private companies are doing that on their own, and the R&D expenditure is mostly tax deductible. So there is a bit of that, but there are 20 trillion, about $3 trillion worth of so-called industry investment funds. That money was collected from various sources like insurance companies, state enterprise, and the local government, and so forth. That money has been invested in many companies, including startups. So China needs to fund the startups, and big companies are good. But in terms of the real technology breakthroughs, probably the money needs to go into companies like small companies like DeepSeek.
So it does sound like, from what you're saying, that China is still going to prioritize where investment is going to go, the sectors that are a priority for the economy. That's really going to be directed at the top by by Beijing.
Oh yeah, I think that the biggest change is the Trump has began the trade war and tech war 5 years ago. And Chinese capital allocation shifted away from property, finance to technology. Okay, so that has been massive change in resource allocation. What you are seeing right now is really the fruits of this shift in policy. There are lots and lots of companies that have received funds to break through in technology that China doesn't have. And some of them succeed. That's what we're seeing.
And that's why we have companies like DeepSeek, which has created a big moment, really, hasn't it, in terms of its breakthrough. It's rather shocked the technology firms in Silicon Valley in the United States that a small company could do this. And it also shows, presumably, that the attempts to restrict development in China, to put export controls on certain products, hasn't really worked. It's just made these companies more entrepreneurial and find ways around all of these restrictions.
Yeah, you look at DeepSeek, the company was a kind of hedge fund, kind of speculating in the stock market, something using something so-called quant approach, buying chips, and to do that. And Chinese government banned that because it was a total waste of resources. So the company got chips, so it pivoted to AI and hired a bunch of inexperienced mathematicians and coders, and let them do whatever they wanted, and you got that. So it's just a good example of what you could achieve if your resources are shifted to technology, and there are a lot of other examples. So look at it. A lot of cars now have tons of sensors. Chinese startup came up with 3D millimeter wave radar, and 3D meaning that it can measure speed of everything that's moving on the road, on the ground. So it has made the technology much more sophisticated. So this is why that autonomous vehicle development in China is going so fast, because there are companies that come up with new technologies. So that is all due to this major shift in Chinese economic priority. Like from 2006 until 2019, and it's over a decade, almost a decade and a half. Chinese economy was so much into property and finance. So this change has been really productive for the economy. Even though a lot of people argue, GDP, you have GDP is not growing like before anymore because it's very easy to add GDP if you put up a bunch of buildings, right? So this is, but technology, once you break through, the benefit lasts forever. See, so that kind of a GDP is much more meaningful in the long run. For while in property, you need to have more and more money to put up more and more buildings. So once you stop, the GDP is gone.
So has this helped China sort of regain its former appeal, the Chinese markets, in terms of investability? It's shown that actually China does have companies that are part of the AI ecosystem, because before this you really had to go to America and look at the big tech companies there. Is that why we're seeing this huge rally now in Chinese tech stocks listed in Hong Kong?
Oh, I think it's mainly sentiment. I think that there is a difference between China and the United States. In the United States, it's more financial capitalism. In technology, what they do is that they try to use mergers and acquisition to create monopolies. Okay, so that's what we have these so-called 7 major tech companies listed that they are very, very profitable. Because they do not face competition, and they squeeze consumers. They get consumers to pay up. And in the U.S., when consumers don't have money, they borrow, and if they cannot borrow, the government borrows so you have this big budget deficit, and that is pumped in to pay for the high prices. And in China, it's a difference that the government does not allow monopoly. So they are really competing very hard. So Chinese tech companies have very thin margins. So this is where I think that Chinese tech stocks kind of go up, but then come down. And the issue is that there's a huge competition. You're not like, even though you come up with something new, that you make some money, but soon there will be competition and the margin will come down. You look at our Chinese automobile companies; they make better cars than the automobile companies anywhere else, but their margin is really thin. So this is where I think for stock investors, it's tricky in terms of kind of figuring out a company that has great technology, how that technology can be translated into sustainable profitability. And that is, I think, the big challenge.
So turning our attention to the relationship between China and the US, we had the new US Treasury Secretary Scott Bessent speak with his Chinese counterpart, Vice Premier He Lifeng. They really swapped complaints, didn't they, about each other's economy. Bessent said the Chinese economy was the most unbalanced in the world. Vice President He complained about the tariffs on Chinese goods. Where does the relationship go from here? President Trump seems optimistic that there could be a trade deal made between the two countries. How do you see the relationship between the two?
I think it's going to be very difficult. I think the issue is that in Anglo-Saxon society, policy is you have a very important person like Donald Trump that can change your policy. But in terms of long-term behavior, it's very much determined by a class of people who what they think about the world. I think they still want to dominate the world. The Anglo-Saxon culture is really driven by dominance for the last few hundred years, and these people view China as a potential adversary that could kind of become bigger than the United States. So the issue is the Chinese economy could become 3 times, 4 times as big as the U.S. economy. On that day, kind of a dominance becomes irrelevant, regardless of what you have in some areas, in military, in technology, whatever. But size matters. That's what a U.S. Senator told me a long time ago. He told me that he asked me when Chinese economy would become bigger than the U.S. I said 2022. That was like in 2008. He was so shocked. He told me something better would happen. So this is, I think, a fundamental. It's independent from what any one particular person thinks. I think this confrontation will go all the way. And what China needs to do is just to stay put, to deter the U.S. from doing anything very rash. In terms of complaints, the issue is that globalization is over. The U.S. can do whatever you want to do. You just do whatever you want to do. And China does what it wants to do. So let's live and let live.
So from what you're saying, really, there's no resolution to this, because if the US issue is that it doesn't want to have a competitor economically, it doesn't want to see China get bigger than the US, that battle has already been lost. China is bigger, is going to get even bigger still. There's no way out, really, is there, for the two countries?
Yeah, I think in terms of recognition of reality, Marco Rubio said, "Oh, this is already a multipolar world." The issue is that there is this grudging recognition that the U.S. cannot make rules for the world anymore. But it doesn't mean the desire is gone. What they are seeing is temporary policies to reduce the U.S.'s cost in terms of in global competition, and they're trying to unwind the Ukraine war, and they're trying to make Russia feel that the United States could be a friend. So in terms of the U.S.'s the right wing, they've been talking about how to peel Russia away of China for a long time. So what's going on? The main objective is to split Russia away from China, and then they hope that maybe Russia will join the United States in terms of dealing with China. So the Anglo-Saxon, you look at the Anglo-Saxon strategy over the last few centuries, it's always been about leveraging another country to go against the main adversary, and that country will sacrifice lots of lives. So that's what Russia did in terms of the war, Napoleonic War, then in terms of containing Germany and Japan. But I don't think that Russia will go down that path. The Russians are very different now. First is that they are not strong like before, and they're pretty. No, they have a lot of challenges. So I think that this strategy is unlikely to work. So the issue is that the U.S. kind of will have many ideas, try different things. But one thing is that they need to deal with the U.S. internal weaknesses. That is in terms of health expenditure, education, national debt, and so forth. So I think that a lot of people who work for Trump, they want to deal with these issues first. So what we're going to see is that over the next few years, the U.S. will be less interventionist in the world, even though it will complain a lot. But its desire will not be gone. So let's see if that can solve its internal problems. If that can, then we're going to have a big global confrontation between China and the United States. But if it struggles with its internal challenges, so what we're going to have a world that will feel a little bit unsteady because there are a lot of verbal kind of back and forth going on. But in terms of reality, it's not going to be a high-risk world. It's going to be relatively peaceful.
Andy, always a pleasure talking with you. Thank you very much indeed.
Thank you. Bye-bye.
That's Shanghai-based independence economist Andy Sher.
You're listening to Peter Lewis's Money Talk.
Money Talk.